Hey, what's up guys, Houston here. And for those of you just finding my YouTube channel, welcome. Please remember to hit that subscribe button and that bell. And for those of you that's always supporting me, salute. And for those of you that are my faithful patrons, I really appreciate it. Double salute. Now, today's video, we're actually going to be talking about student loans with no credit check. And these are mostly private student loans, okay? And one of the things that I would tell you guys, whenever you're considering dealing with private student loans, sometimes they may not be as transparent with you in terms of what they're looking for, but I would tell you this. Here's one system that you definitely want to keep in mind. And they're going to do a background check for some of these people. And it's called First Advantage Corp. Okay? It's called First Advantage Corp. And they do background checks and everything. So in terms of if you put in your information and everything, trying to get a student loan and stuff like that, just keep in mind that they more likely will run a background check on you. Okay, if you all know of any other systems that they're actually using, especially when they're dealing with students and everything, put a comment below and let me know. Now, here's the thing about it. If you're talking about getting a no credit check student loan through the federal government, so which is your Fed loan, okay? So you would go through your, it's actually called your Fed direct loan, excuse me. Alright. And again, they use no credit check, no income. Alright. So that's where you have to actually fill out that, what they call it, that FAFSA. Now, here's the thing about it that a lot of our community are not aware of, and guess what? Our financial advisors don't usually tell us. There's two sets of money, okay? And most of the time, they don't tell minorities that, okay, you qualify for X amount of dollars with FAFSA. But there's also another government program, say for like childcare and things of that nature. There's another set of money that they don't tell the minorities about a lot of times, okay? So when you're in your financial aid office and everything, especially if you have a child, and I'm talking about single fathers just as well as single mothers or whatever, you definitely want to inquire about it. Also, in terms of like with FAFSA trying to get more student loan money and stuff like that, and their game is they have this ratio threshold, and if anybody that works in a financial aid office, they maybe can give more details on it. But here's the thing about it. They said the less income you have, the more money you get, right? But a lot of people, they only get them to a certain threshold in order for education funding and stuff, and they'll cut them off, right? And I don't know why they do that, but a lot of times, even if you don't have a whole lot of income, they still won't give you the equivalent, they still won't give you enough money, right? So I guess I should be careful with the words I choose on camera so I won't fumble. But nonetheless, again, if you're trying to get a student loan and you don't have any credit, you don't have any income, and you're trying to go through college and stuff like that, the Fed direct loans is through FAFSA. That's the first, and then they also have a separate set of funding that you need to ask about, okay, especially if you're a single father, single mother. Now, that being said, you have other lenders out there, okay? So you have the education, they call it the education loans finance, okay? And again, with companies like this, they don't charge any fees. They don't on their application, their origination, or their prepay. Because if you notice, like when you get a student loan, a lot of times you may get a $10,000 student loan, but they only give you maybe about $8,500, right? Or sometimes they only give you $7,000. You're like, wait a minute, I was approved for $10,000. Why they only gave me $7,000 or $8,500? So they go into this administrative costs and stuff, but they never tell you that in terms of those origination fees and stuff, those fees also calculate the insurance on that loan. So if you default on that loan, they have an insurance policy. They're not giving you any free money. Just believe that. That's the reason, like with the federal government, they're like canceling a lot of student loan debt, because a lot of times with the federal government, for every dollar they loan you, they're getting two. Okay, one from the insurance company and then one that you're paying back. So that's the reason they tell you, okay, you're going to pay back X amount and we're going to forgive the rest. Trust me, they're not giving it to you for free. All right, those fees are already. This is the reason why the federal government had got into this big fight with Sallie Mae. When the Department of Justice, okay, they exposed Sallie Mae for student loans and stuff like that. We're going to get back talking about these private student loans, but you all have to understand this. And I'll talk about this more in another video. But the Department of Justice, when they got into this, when they found out that Sallie Mae was committing fraud, they were stealing loans from the federal government and then selling them back to them. Plus, with the fees that they was collecting and stuff, they're supposed to be paying the insurance premiums and stuff like that. And a lot of people don't know that. So a lot of people now, they're like, well, how come I don't have, why is my loan balance steady going up? And I've been paying and stuff. A lot of times in the past, they never really applied any of your payments towards your loan. They kept that money and they never transferred it over to the federal government. So then the government, instead of saying, okay, we're going to start dealing with them, what happens? Then Navient, they create a subsidiary of Navient. So this is what I'm saying, guys. A lot of times where your loan balance may be small, okay, well, you know that, okay, I don't owe this much money. And then all of a sudden, when you see it on your credit report is like doubled, you're like, wait a minute, I don't owe this much money. It's because they let the interest continue to calculate, as well as never make any payments on the loan. So toward the premium, toward the actual loan balance or whatever. So those are things you actually have to understand. And like I said, I'll go over it more in another video. But let's talk about these private loans, okay? So like with education loan finance, there's no application fees, no origination fees, no penalty, okay? And their loans usually go up to about $15,000, and their debt to income ratio, they tolerate, excuse me, it's a 55% DTI, okay? So again, if you're a person that's looking for a private loan, private student loan and stuff like that, and you may not have the best credit or don't have any credit and stuff, this is one of those lenders, all right? Then you have FundingU, all right? And please, if anybody has used any of these lenders, let me know. What was your experience? Is it challenging for you? Because a lot of these private lenders, they're focusing more on people that are international students and stuff like that. So a lot of us that are stateside, we're not really aware of these financial institutions that offer loans with no credit check, right? So with FundingU, you don't have to have a cosigner. You don't have to have a credit history. They don't do a hard pull on your credit. What they do, they use your projected income depending on your major, right? Okay, and they use your projected student loan debt is what they use. Now, So the only thing about FundingU that's kind of bad is that they'll give you the money, but while you're going to school, you have to start making payments while you're in school. Okay, so that's their biggest caveat, I would say, that a lot of people may not like about it. But in terms of if you're trying to get yourself back into school, and as a matter of fact, a lot of people now, because of more online institutions and stuff, they're willing to say, hey, okay, I want to go back to school, finish out my degree and stuff, because I don't have to deal with the hustle and bustle of traffic and stuff like that. I can find more time because I'm at home and doing remote work, right? So that's something that you have to keep out for in terms of with some of these loans. Do you have to pay them back while you're still in school? And FundingU is one of those. Now, some of you all may have heard of this company. It's called Stride Funding. Is that right? Yes. All right. Now, with Stride Funding, what they do, they share your income. So they take like 2 to 9% of your income that you make once you finish school. So that's what it is. Once you finish school, they take 2 to 9% of your income. Okay. The cool part about it, so say that you end up unemployed and stuff like that. If you end up unemployed, then they actually will stop your payments. So that's one good thing about Stride Funding. Again, it's no credit. They also do job placement as well. So they actually try to help you find a job. I would too. You owe me money. Hey, let's get a job. Gotta go, right? So at the same time, I think it's pretty cool because a lot of people, they may not have the money right then and there. They really want to go to the school and stuff like that. But at the same time, because they don't have the money to actually get things going and stuff, they actually will help you get into school. One of the things about it, if you have a bankruptcy on your credit report, then they say you have to wait about 7 years, okay? That's what they said. Sometimes you may find a workaround of that. It just depends on the, I guess, the degree and how soon you're looking to get into the job market once you finish, okay? So now here's another one. Now with Lendkey, they actually do, you have to have about a 660 credit score, but they, again, they're a private lender, okay? So they look at your DTI, your debt to income ratio, in terms of trying to determine how much you'll be able to qualify for, and their threshold is about, their DTI is about 33%, okay? And they don't include your housing costs, so it's not all of your DTI, is just your existing bills minus your housing costs, okay? So that's kind of cool about them. So at least it gives you a better opportunity to get your feet in the door at the at the education institution you want to be at, right? So then you have, and again, for many of you, if you used any of these private lenders, let me know, what do you think about them? How do you feel about them? Do you think that the interest rate was just too high for you? I know with the Fed direct loans and stuff, you're going to get a very low interest rate and stuff like that and better protection. But with the private lenders and stuff like that, just keep in mind, you don't have as much protection as you would with dealing with the federal government, okay? Now, there's one that's DotM Money. All right. And they're a student loan lender as well. Now, it's no credit score. Excuse me. They have no credit score also. All right. So it's based on, here's the thing about it. It's based on the GPA. Um, here's my theory on education. All right, and I know some of you, because I know there's a lot of you guys that follow me. You may have bachelor's degrees, master's degrees, so you more educated than I am. Okay, but here's the thing about it, and I've been trying to encourage parents over the past 15, 20 years, is instead of going into financial debt, right, to go to a 4-year university, I would start taking advantage of sending my kid off to a 2-year college. The reason is because, again, you're still working with a child that's maturity level isn't there. Okay, that's for one. But if you just throw that kid out and, okay, you're on your own, you have to start doing all this on your own, most of the time, and they actually did the number, there's over, I think it's over 60% of the people that went to 4-year college degrees, they don't have college degrees. Went to 4-year colleges to get a degree, they don't have it. They have the student loan debt, but they never finish, right? They never finish. So it's like, why would you go into debt spending $25,000, $30,000, $50,000 and you don't even have the degree? Why not go to the junior college for some maturity, right? And that way build your GPA up. Once you get that GPA up to about a 4.0 or whatever, then you can get, most of the time, you can get all the free money you want. Right? But at the same time, you don't start off in life with all of this debt, right? Which puts you behind the 8 ball. Now, what has happened that's good is that if you currently have a student loan, all right, what has happened, and again, I'll touch more on this in a separate video, but what has happened is that, like, your student loan payment, they're only looking at 1% of that being calculated. So you may have a $500 monthly student loan payment. So they're only going to take 1% of that payment that they actually are going to calculate as debt. So to help you qualify for a mortgage. So which it does help some, but you still have this debt load that you have to carry, and especially for some of you guys that may not even qualify to have your student debt canceled. All right, so that's one of the things. But like I said, hey, each his own, you know. And granted, I do have a college degree. I have only a 2-year, but everybody else that works for me, they're 4-year, they're smarter than I am, you know. But at the same time, I own the company. So that being said, another company that offers private student loans, Empower. Okay. Now Empower, again, they're not worried about your credit score. So this gives you a lot of leverage. And again, most of these companies, they may focus on people that are coming in from foreign countries and stuff. But now, American-based people, these are loans that you should also take a look at as well. Because again, if they're not worried about a credit score, some of them are not worried about income, it may give you some leverage to be able to get into school or to help find more money as college tuition goes up, to be able to help pay for that education, right? So this is Houston with three-way funding. Again, I'm going to go more in depth on another video talking about student loans and stuff, but I just wanted to bring it to your attention that these are student loans that if you don't have no credit or you have bad credit, these are the lenders that you may want to reach out to qualify for a student loan to help you pay for school. Alright, so this is Houston with three-way funding. Again, for those of you just following me or just just following me. Again, sorry guys, it's hot. It's hot out here in California right now. But for those of you that just found my YouTube channel, I would say thank you. Please remember to subscribe, comment, and like. And for those of you always following me and supporting me, salute.